ONDC, a revolution in making. So these days we have new talk of the town, the ONDC. But what is ONDC? ONDC stands for Open Network for Digital Commerce. Being deemed the Government of India's most ambitious project after UPI, ONDC can be simplified as one common platform where from electronics to books, from groceries to goods, you get it all. ONDC is there for you, amalgamating all major chunks into one single platform. So ONDC is to online shopping what UPI is to digital payments, a revolution on its own. Just like a UPI is an all-time accessible solution for transaction, ONDC is a one-stop solution for online shopping. And let me just simplify this for you. In other words, ONDC can be termed as an online meta store. Or we say an online mall where you have various stores of different MNCs. So mall is only as good as the store it keeps, as successful as the outlet it feeds. So what needs to be known is that Infosys co-founder Nandan Nilekani is the key person behind this initiative, the man behind the Aadhaar card revolution. So coming to the point, what does ONDC mean to SMEs? Unsurprisingly, over 60% of the e-commerce market in India has a duopoly between Amazon and Flipkart. And before going further, let me just tell the ones who don't know and those who know too, they may just listen. There are basically two types of market models, the marketplace model and the inventory model. In an inventory model, the aggregated platform provides the logistics facility to the seller in bulk quantities through its perks of bargains via product listing, and then they resell the same products at higher prices as per their profit margin. Whereas in the marketplace model, the e-commerce company offers a digital platform to carry out transactions between buyers and sellers. India generally runs on the marketplace model. Today, India has over 800 million active mobile internet users. So there is scope for payments, e-commerce, consumption and other fintech products. So India basically has two types of customer segments. The former, who is in quest of a better experience, is service oriented and goes after product quality. The latter, to whom we say low-end customers. They are basically wooed by the hefty discounts, cashbacks, sales and deals, always ready to compromise on products and services since the flat or off looks more appealing to them. ONDC is basically meant for the latter ones, the ones who makes up almost two-thirds of the Indian population. As an ecosystem, ONDC enables millions of merchants, SMBs, women and micro-entrepreneurs. It may not kill platforms like Uber, Ola, Swiggy, Zomato or 1mg, but it can certainly evolve as a threat. Precisely what UPI did to Visa and MasterCard. Today, UPI makes more volumes in a month than the combined annual credit card spends of India. And needless to say, the big statement of the Commerce and Industry Minister of India, Piyush Goyal, only adds to the ONDC's credibility. Recently in March 2023, Piyush Goyal called it an initiative of the government where the effort is to encourage small companies and startups to integrate into the e-commerce platform. He further added how ONDC will help small retailers survive the onslaught of large tech-based e-commerce firms. So how does an e-commerce website mint money? When a big aggregator like Amazon or Flipkart jumps into the e-commerce market, first of all, they are backed by an unfair advantage. That is, they have their own functioning ecosystem. Then there is the obvious power to limit the search results. The reason why Amazon or Flipkart appear at the top by default whenever you try to manually search for any random book, electronic item or any other tangible item. Not only this, but the big e-commerce platform have the power to control logistics as well as the pricing. But then comes the ONDC, where you get to discover the local store, where near is the dear. ONDC provides a level playing field. By level playing field, we mean bringing an equal chance of success for each player. It is a sure shot that ONDC will come up, or as we say, will enable the option to choose a delivery partner. So the broader picture is that your local area's chain of delivery partner has more chances to work independently, unlike Zomato and Swiggy, which have their own delivery partners in their ecosystem. So you never know when your local delivery partner ends up becoming a delivery giant, or as we say, the next delivery. ONDC paving the way for small-scale entrepreneurs. The thing that needs to be known time and again is that ONDC is not an app. It is not a regulatory body, but it is a platform backed by the government. So from the small-scale industries to the retailers, ONDC makes it up by cutting down the setup cost. Another merit of the ONDC is the unified rating system, which generally means that it will be the ratings that decide the ranking. Not only the customer, but now the seller can also look after the customer's rating. The more they see the returns, the less they will opt for the run. So now that the cost and technological hindrances have ended, then you easily get access to the ease of doing business. A report as of April 29-22 says that the government is about to launch e-commerce platform and aims to cover 100 cities in the near future. So why ONDC is being called the government's ambitious project is because it restricts the aggregator platforms. Ever wondered why the government of India is giving a major push to the ONDC? Well, the ONDC has the potential to uplift kirana wala, shopkeepers and small-scale business to their fullest. One platform that democratizes the functioning of e-commerce, a common platform where you can compare prices for all other applications. There's not much to be told about how biggies like Zomato and Swiggy regulate their delivery charges. Sometimes it could be external factors like traffic hours. Sometimes it could be internal, per se logistical. So the arrival of ONDC brings healthy competition. So let us just make a healthy comparison also. Unlike Swiggy and Zomato, which are integrated platforms with end-to-end encryption in their whole commerce, we have ONDC, which is an open platform. Where Swiggy Zomato charges a hefty commission of 18 to 25% from the customers, ONDC just makes it with a 2 to 6% commission rate. Where Swiggy Zomato has in-house logistics, the ONDC makes it up with free deliveries. If Swiggy powered McDonald's offer you the McBurger at 282.5 rupees, the ONDC may clinch it for you at only rupees 109. If for a while it looks confined by the food biggies, then switch to Ola and Uber, take for a while. The tech capital of India, Bangalore has got the Namma Yatri taxi app, becoming the latest to join the ONDC network. So now Ola Uber has a competitor. The local taxi player has a marketplace, and more importantly, the customer has a competing price. Isn't it a win-win situation for everyone? So what do experts say about ONDC? With the advent of ONDC, unit economics will be better for restaurants. Since it will be laced with lower prices, it will be sure to appeal to consumers. ONDC has the potential to emerge as a supplementary proposition. ONDC's CEO T. Koshi has claimed that it will be driven by practices, not unhealthy discounting. Meanwhile, Indian businessman Motilal Oswal sees ONDC as a threat to Zomato Swiggy only if scaled up meaningfully. However, some experts are of the opinion that at the moment, the discounts on ONDC don't look sustainable. So who will sign up for ONDC? It is speculated that various banks and other retail segments are in talks to join ONDC, and the recent funding invested in the ONDC by key market players definitely looks to shape up its arrival in a hassle-free way. What could be better than this is that it's only the government that is inducing the kirana stores to come into this platform and be one of the retail partners. So now the ONDC takeaways. To sustain itself, Zomato Swiggy needs to reduce its commission. We could see hundreds of ONDC exclusive restaurants and cloud kitchens in the making. It is the customer who decides the delivery fee from the list. Discounts may fade after wider adoption. So the ecosystem level integration roughly means the nearest shop may be registered on Meesho, Magicpin or any other such player, and the buyer apps like Paytm Mall, PhonePe Switch, etc. can have access to it. It is as simple as the SBI or any other bank account on either of the UPI platforms are a choice. Per se, Amazon Pay, PhonePe, etc. which can be opted to transact. So the factors to watch in the ONDC. First of all, the delivery speed. The e-commerce giants were often backed by robust delivery speed. Can ONDC replicate the same? Handling high volumes. The e-commerce giants knows how to handle operations with high risk and high order. Is the ONDC setup ready to materialize? Then there is customer trust and dispute resolution. How the user experience ends up will be the deciding factor for the ONDC's sustainability. Customer-centric commerce. We need to see that the big conglomerates are often backed by a written policy, trusted goods, and 24/7 customer support. Much clarity is still needed in the refund and return standardization process. And this ONDC effectiveness. In the long run, it will be ONDC's effectiveness that will determine on the basis of its ace over traditional platforms without any discount. So the dedicated government needs to pull in the dedicated ONDC app to prevent private players from making their own ONDC substitute. For now, it could be said for sure that the ONDC revolution will eliminate the middlemen between business and consumer. So is it the apt time to say goodbye to the hidden charges and the inflated delivery charges? ONDC is in its nascent stage. It will only get better in the coming days. Do like and share this video, and if you want such series in the future, then do subscribe to our channel, The Pamphlet.